Devin Choksey joins us, Managing Director with Choksey Securities. Devin, let's not discuss Reliance numbers. We've discussed that with you on Friday itself. What about the ownership patterns? Do you think more than numbers, it's the ownership pattern which will drive Reliance Industries in the near term?
Yeah, good morning, Nikunj. Well, I think the people have been expecting some amount of positives, I think, on the news flow front, and that's what I think they've been counting on for, I think, taking the ownership into this stock. Of course, the numbers on Friday which have announced, I think they have definitely, I think, convinced them that the company has the ability to bounce back on the refining margins which they have done. I would think that going forward, the major amount of news flow which would probably drive Reliance stock price would be twofold from the refining space and E&P space. First, in case of E&P space, probably I think they would look at the kind of a price revision agreement with the government, which would probably get effected from FY 14-15 onwards. And that's where I think the market would start calculating the further numbers for 14-15 financial year. And most importantly, the KGD6 related issues, the allowing of the capacity expansions and the getting estimates about the production, that will also drive the numbers. But if these two are going to be eventually looked at from the government, what is more important and which is going to be more convincing to the analyst and the market men is going to be the shale gas numbers which are coming up in the consolidated books at the end of the financial years. The $900 million kind of a revenue, which is twice the size, I think could possibly suggest that where exactly they are taking this company to. To my mind, I think shale gas holds larger amount of potential to probably, I think, contribute into the profits of the company on a consolidated basis. So this is one area where probably market would look at very favorably going forward and see how exactly the price revision in the shale gas contribution coming in, and more than anything else, I think the revival, probably not called revival, but I think would say that implementation of 4G technology and the kind of prospects thereon could also basically drive the sentiments and the market price of the stock. I would think that the market at this point of time want to buy into this particular stock. At every fall, there would be an opportunity to get into, and that's what I'm getting the feeling from even fund managers.
What are your thoughts on PSU Banks? If I look at the bond yields on Friday, they've come way below 8%. In the near term, is there a case to buy PSU Banks because PSU Banks suddenly are in a sweet spot?
Yes, Nikunj, I think you are right. With the reduction in the bond yield, I think that is again becoming, I think, a good opportunity for a larger AFS portfolios of banks like PNB. I think would be, I think, a big opportunity. So certainly, I think on such kind of event and the possibilities of RBI bringing down the rate of interest, I think one could consider buying into PSU banks. Also because the valuation wise, if you look at it, many of the PSU banks are still staying, I think, far lucrative, much below 1.5 times price to book value in most of the large size banks also. So to a greater extent, I think that's an opportunity. But more importantly, what I'm looking at next month is in the budget, probably, I think the FM may make kind of a statement and give some kind of a policy direction on the consolidation, and that could be a little bit more interesting play going forward for the long term of the PSU banks. I would think that consolidation would probably mean a larger benefit coming into the likes of State Bank, of course, I think is the largest one, but I think BOBs, or for that matter even PNB, all those banks could possibly, I think, come out with a very decent set of, I think, strategy for getting consolidated and probably grow their business model faster. So I'm relatively more confident on the longer term prospects given the kind of opportunity under the consolidation that these banks may offer. So would stay invested or buy further into some of the quality names like BOB, even Corporation Bank within the mid segment, I think, can be considered for adding into the portfolio.
Right, Devin, a quick call on Ultratech Cement as well as Oberoi Realty.
Don't know about the Oberoi Realty as much, but I think the Ultratech Cement, largely the factor is influencing is about the cost, and that's going to be reality. Most of the companies in the cement space are going to face the cost pressure. I think there may be some exceptions in case of Madras Cement particularly, I think, where the cost is definitely controlled much better through the alternate source of energy that they have. So that could be, I think, a distinct advantage going to them, but they are a regional company anyway. My reading says that I think most of the cement companies at this point of time, they are quoting at a fair valuation. Having further headroom from the current level would mean that they would require to have additional amount of volume coming in, and should that happen along with the stability in the price, maybe I think you could see some 10 to 15% kind of an upside into cement companies, but otherwise at this point of time I think they may probably consolidate, call it time correction for some more time, before which I think it starts getting into the opportunity buying space.
Even now for the quarter gone by, weakness in Indian currency was a big tailwind for IT companies, but now rupee has strengthened. As we speak, rupee is trading at a fresh 2-month high. So do you think in the near term that could be a key challenge for IT companies? What was the tailwind now suddenly could become a headwind?
Yeah, Nikunj, the way in which I look at it, at least in the near term, things are not going to go very adverse, because most of the IT companies, knowing their receivables well, they would have, I think, done the hedging as is the normal practice with many of them. So in such situation, I think they may still probably get, I think, 54 plus 54 and a half kind of a realization going forward, at least for next 2 to 3 quarters. But certainly I think appreciating rupee would demand some amount of adjustment, and adjustment would be in form of price. Fortunately, the situation is turning out little better in the global environment, wherein I think they may be in a position to talk about, I think, the pricing going forward, if not immediately. So FY 13-14 financial year, the new contracts that they would probably win would have that particular advantage to them, that the rupee has fallen and they may probably increase their prices a bit, even in the improved situation. Not very easy to, I think, calculate as to how much, I think, impact could come in next 1 quarter or so, but I do believe that, I think, till such point of time, I think if 50 paisa kind of an appreciation happens in rupee, won't have very significant impact on the bottom line of most of the at least 4 top line IT companies which we calculate. Beyond that, I think one will have to look at numbers little bit more in detail once, I think, things start giving up as far as, I think, rupee is concerned and start appreciating.
Devin, final question, what are your thoughts on Hero Motocorp? Suddenly Hero Motocorp is doing all the wrong things and Bajaj Auto is doing all the right things.
Challenging environment, Nikunj, for sure, I think, and the market has started liking the companies which have started producing better vehicles, better performance vehicles. Of course, I think that is where the Bajaj Auto stands better compared to others in the industry. To my mind, I think nothing is immediately changing as far as Hero Motocorp is concerned. Going forward, the larger focus would be on exports, which I guess, I think, would be a 2-3 year game plan from their side. And of course, I think margin improvements where they will have to systematically work where Bajaj worked 4-5 years back. So certainly I think Bajaj would hold advantage compared to Hero as far as margins are concerned, as far as their exports are concerned. So I would relatively stay more confident with the strategy of Bajaj Auto, and more importantly, for next year they have got their currency hedged at 54.5 above levels, which means that I think even if the rupee stands appreciated to 51, 52 or 49, 50 levels, I think the company would have a 10% straight away gain that they were talking about after the result announcement. So I would think that Bajaj would be better placed compared to Hero in the at least next 4 to 8 quarters time.
But what about valuations? I was looking at a brokerage report based on FY14. This is not FY13. FY14 estimates. Bajaj Auto is trading at a P multiple of something like 18 times. 18 times for a two-wheeler company is not stretched, but it is very, very stretched.
Nikunj, a lot would depend again, I think, on where exactly the volumes will come from. If the volumes continue to take in, and probably even this kind of environment where Bajaj has performed better on the volume front compared to others, and if the industry volume starts picking up, then I think that may not be the case, because there they will probably, I think, have an advantage of producing more and getting the better out of that. So that is one thing which I would say in favor of Bajaj Auto. Though I do agree that I think 18p would leave little less headroom for anybody if the volume growth is not picking up. But my calculation says that the volume growth will pick up in coming times, and that's where the company should be better placed. And not forgetting few more things, of course, which I said, the higher premium which is given to them is largely because of the currency hedge that they have done very smartly, which protects their earning for the next financial year 13-14 by at least 10% and above in appreciating rupee environment, where they have got 1/3 is an export coming in the books. So to that extent, I think the company's premium valuation is justified. But yes, I think for higher valuation to sustain, you require to see higher volume growth coming in, and that's where I think my eyes would be on to see where exactly the growth comes in. But Bajaj looks more favorable given the growth coming into the volume for the powerful motorbikes, I think, in which I think they are dominating their positions significantly in the market scenario.